us today for this webinar about the Farm Tax Incentive Program that we are pleased to share with you today. This webinar will be approximately 60 minutes, including time for Q&A at the end of the presentation. You should all be able to hear the presenters through your computer speakers or your headsets. Currently, you are all set to mute, but you can click on the Q&A icon on your control bar and post a question at any time. We will hold all questions until the end of the presentation when the presenters will answer as many as possible. Questions that do not get answered will be responded to as soon as possible by your local MPAC account manager. This webinar is being recorded and will be shared with you early next week. The PowerPoint presentation will be shared with you by end of week. Please welcome our webinar host, Chris Rickett, Director, Municipal and Stakeholder Relations.
Good afternoon. Thanks, Christine, and thank you to all of our stakeholders who have made time to join us this afternoon. Today's webinar overview is that our subject matters will provide an overview of the Farm Tax Incentive Program, including its administration, the process for municipalities from application through to approval, and we'll also have a discussion on severance and consolidations, tax incentive approvals, and tax incentive year ends. Our speakers today are Carl Groskopf, a Senior Policy Advisor with the Ontario Ministry of Agriculture, Food and Rural Affairs, Sarah Potts, who's the Program Development Specialist with Agricorp, Aaron Jennings, who's a Manager of Assessment and Taxation Mitigation here at MPAC, and James Harvey, our Account Manager for Government Relations here at MPAC. With that, I'll turn it over to Carl, who will get us all started.
Thank you very much, Chris. I am, in fact, Carl Groskopf. I'm with OMAFRA. I've been in the public sector now for about 32, 33 years, of which about the last 7 now have been working on the Farm Property Class Tax Rate Program. If you can go to the next slide, please. In the course of the next few slides, I'll be providing a high-level overview, providing some of the context about what this program is, and this will lead into the other presenters from both MPAC and Agricorp going into a bit of the details of how these programs operate. First of all, I'd like to do a quick shout out, though, to MPAC and a thanks to their municipal and stakeholder relations team for putting this webinar together and bringing everyone together. It's a great opportunity to dispel some myths about how this program operates, as well as to further all our understanding about this program. The Farm Property Class Tax Rate Program, which is a mouthful to say, I'm just going to refer to it now as the Farm Tax Program or the program. It's one of the programs that the province has in place to help support our agricultural sector. It provides eligible farmland owners with a property tax reduction for keeping their agricultural lands in production. In the policy world, one of the things we're often concerned with is about the authority for things such as these programs. The authority for this program comes out from the Assessment Act, more specifically Regulation 282, and even more specifically Section 8 and Section 8.1 under that regulation. Now you'll see in the first couple of slides, I put in some links that will bring that when the deck is shared with everybody, it will actually bring you right to those specific sections and references for the farm tax program. So if you wanted to, on your own time, get more involved, please click on those links and it'll take you right there. What I did want to point out, though, is that one of the misconceptions that we often hear is that, particularly from our forward-facing stakeholders, those being the actual property owners and farmers, that when they're engaging OMAFRA and Agricorp, they often think that this is a program that is responsibility of the Ministry of Agriculture, Food and Rural Affairs. Actually, it's not. It's a program that is the responsibility of the Ministry of Finance. If you go to the next slide, please. This kind of segues into, well, who's doing what for the program. So OMAFRA is responsible to the Minister of Finance for the delivery of the program. We provide our colleagues over at MOF with agricultural policy advice to help shape the program. And this is often when we get letters or calls or any types of communications that are coming in from, for example, municipalities or from property owners, and they're raising issues, policy-related issues. Part of our response often includes that, that we're forwarding their concerns on to the Ministry of Finance for their consideration. Again, our responsibility is more in the delivery of the program. OMAFRA used to deliver the program hands-on ourselves prior to February 2019, and that was the date that we then engaged Agricorp. Agricorp is a provincial crown agency that specializes in the delivery of agricultural programs. So this was a good fit in that it provided a one-window opportunity where now landowners and farmers could actually just go to Agricorp and do all their business in terms of registering for the program, getting their farm business registration, annual registration done, applying for crop commodity insurance, and that type of thing. So it was a one-window delivery aspect instead of going back and forth between OMAFRA and an Agricorp. MPAC, of course, they assess and classify properties, all properties in Ontario. Municipalities are setting the tax rates and issues a tax bill. Again, this is a very simplistic, high-level view. There's a lot more effort than just, one line that MPAC and the municipalities are doing to deliver or be a partner in delivery of this program. The Assessment Review Board is also involved in, for example, granting time extensions for requests for reconsideration. They're also involved in the appeals process, where if there's an appeal related to a property standing in the farm tax program, that they then take in that appeal and refer it to the Agricultural, Food and Rural Affairs Appeals Tribunal. And they hear about 60 to 80 farm tax program related cases annually. I probably should have added on this slide as well the role of the property owner. They, of course, are responsible for ensuring that their contact information is up to date with Agricorp and with MPAC, so that we can get a hold of them as we need to. They're also responsible for getting their applications in on time, which seems to be a big area of concern, which then trickles down and impacts, well, both Agricorp, MPAC, and of course municipalities, in that it's resulting in tax incentive adjustments or TIYs down the road. One of our goals is to try to reduce those and minimize that impact. There always will be some in-year kind of sales on farm properties that will require those last-minute tax adjustments, but there's far too many farm property owners that are late in getting their applications in or registering their farm business to ensure that they are getting the farm tax rate. Next slide, please. Just quickly, a bit of the context and background for the farm tax program. Happy birthday, farm tax program. It's 50 years now that it's been in place. For some of you who've been around a while, you may have known it from 1970 and 1998 as the farm tax rebate program. The Ministry of Finance had reformulated that to move it away as a rebate program back in 1998. The eligibility requirements are designed to kind of delineate commercial farming from the hobby farming. There is a dollar threshold that's managed and monitored through the Farm Business Registry program. And my colleagues will be talking about that a little bit in detail a little bit later on. But we also have some citizenship requirements as well as corporate structuring requirements that help to ensure that the tax savings, which are significant, are accrued in the local community as much as possible. So we do this particularly with the corporate structuring, where we only allow one single level of corporate structuring to help prevent the diffusion of that tax savings to a larger base of shareholders who may not be interested in Agricorp, in agriculture, but they may not be even Canadian citizenships. They could be foreign or abroad and just be there for more of an investment purpose. As you know, the farm tax rate itself is set at no higher than 25% of your municipal residential rate. Municipalities are free to set lower rates if they further want to support their local farmers. We've probably seen last count about 14 or 15 municipalities that have set lower rates. I think the lowest rate I've seen is about at 20%. When we're talking about the number of farm properties in Ontario, generally there's about 210,000 parcels of land that's classed as farmland. About 4/5 of those, 80% or so, 170,000 are taxed at the farm tax rate. Now, those are not individual farms themselves. Farms often consist of a number of parcels of land. So we're probably looking at about 40 to 43,000 farms themselves that are part of the program. I've had a little fun with math and kind of based on the average 200-acre farm and typical municipal tax rates, it probably works out to an estimated tax savings of about $18,000 to $20,000 on that farm, and that's very significant. And our farmers and farm organizations really appreciate that tax savings. Similar programs that you may come across, the Managed Forest Tax Incentive Program and the Conservation Land Tax Incentive Program. Those are maintained by the Ministry of Natural Resources and Forestry. There's also the Farm Forestry Exemption, which MPAC administers. Links to all those initiatives are within the presentation for when you get it. And that is my content right now, and I'll turn it over to Agricorp.
All right, thank you, Carl. My name is Sarah Potts. I'm a program development specialist with Agricorp. Just want to start off by echoing Carl's sentiments and thanking MPAC for setting up this session today. Thank you also to everyone who's joined us and giving us an opportunity to talk about the Farm Property Class Tax Rate Program. I think this is a great opportunity for us all to get together and talk about the program. Before we get into the details of farm tax, we thought it would be helpful just to touch on the Farm Business Registration Program, or FBR as we call it. FBR is one of the requirements that we look at when we're determining eligibility for the farm tax class. And as such, there are some interactions between the two programs. So we just thought that might provide some helpful background. Now, to obtain a farm business registration number, farmers would need to contact Agricorp and they would need to complete a registration process. To be eligible to register, they need to demonstrate that they've grossed $7,000 or more in farming income in the previous year. Any farm business that makes $7,000 or more in farm income is required to register. Once they're in the program, it is necessary to maintain that every year, and that would be done by going through a renewal process and providing a payment to Agricorp. By renewing and completing that payment, they are affirming that they are maintaining that minimum of $7,000 in farming income. Funds that are collected through the registration payments are then directed to the farm organization of their choice, and that would secure their membership with that organization. So that would be the Ontario Federation of Agriculture, Christian Farmers Federation of Ontario, as well as the National Farmers Union. Now, if someone's not able to participate in the registration process for religious reasons, they can apply to the Agriculture and Rural Affairs Appeal Tribunal for an exemption. There's also options to apply for an exemption through the Farm Property Class Tax Rate Program if for some reason the farm business isn't able to meet the $7,000 gross farm income requirement, but they are still carrying out some farming activities. Now, FBR is a requirement for some other programs as well. That would include farm vehicle license plates, initiatives under the Canadian Agricultural Partnership, as well as the Wildlife Damage Compensation Program. We generally have about 44,000 farm businesses that register annually, and that number is fairly stable. Can we go to the next slide? Okay, I think we can skip ahead to the next one as well. So that pretty much covers some of the basics on FBR. Now we can move on to the Farm Property Class Tax Rate Program. So I'll start off just with an overview of the program and some of the key roles that the various stakeholders play. I know Carl did touch on some of this already. So properties that are approved for the program would be eligible for the reduced tax rate of no more than 25% of the municipality's residential tax rate. And that rate reduction encourages farmland to remain in agricultural production. And that's the ultimate goal of the program. There's a number of stakeholders involved in the policy and administration of the program from a property owner perspective. The key touch points would be MPAC, who would determine the classification and value of the property, Agricorp, who would determine eligibility for the farm property class tax rate, and then the municipalities who would then apply that reduced tax rate. Next slide. So in terms of eligibility for the program, there's essentially 4 requirements that Agricorp will look at when we're making that eligibility determination. So first and foremost, the property needs to be classed and valued as farmland by MPAC. The property needs to be actively farmed. The farm business operating on the property needs to have the valid FBR registration. The farm business needs to be generating $7,000 or more in farm income. The property owners also need to be Canadian citizens or permanent residents. Next slide. So just to give a bit more detail on each of those eligibility points, in terms of property classification, MPAC would classify the property based on the requirements set out in the Assessment Act. They'll then report all properties that are classified as farmland to Agricorp, and that's provided on a monthly basis and would include information on property ownership. So when we receive that information at Agricorp, we'll do a comparison from month to month to identify any changes that might have occurred. Then we'll look at the nature of that change to determine if an application to the program might be warranted. If the property is not currently classified as farmland, the property owners would need to contact MPAC to initiate the process to have that reassessed. Now, if that change is approved by MPAC, they would notify Agricorp, and we would issue an application to the property owner at that point. So the property must be actively farmed, and the farm business operating on the property must have a valid FBR number, and that would be for the year before the property tax year that we're assessing. So invoices for the program would be issued every year in January, and the payment for that, for the FBR, is due by March 1st or August 31st for new registrants. We may, however, accept registrations up to March 1st of the next year if there are some extenuating circumstances that had prevented them from filing that registration earlier. Now, in situations where the farm business can't meet the $7,000 gross farm income requirement, but they are still actively farming the property, possibly because they have a startup operation, for example, they have had an abnormal production year, or if there's some other reasons such as an illness, they could also apply for a temporary exemption. And there's the exemptions for religious reasons as well. So the final requirement that we would look at in determining eligibility would be citizenship. So an individual or a group of individuals would need to all be citizens or permanent residents of Canada. If the property is owned by a corporation, more than 50% of the voting shares would need to be owned by individuals who are either citizens or permanent residents. There's also similar requirements for other ownership structures that are defined in the legislation. This ensures that the tax benefit is received by citizens or permanent residents only. Next slide. So that at a high level covers what we look at when we're determining eligibility for the farm tax rate. Next, we'll just touch on the process and timelines for delivery of the program. So as we mentioned, MPAC reports property information to Agricorp on a monthly basis, and that carries on pretty much throughout the year. Agricorp will review that data and determine if there's been an ownership change or another significant change that might warrant a program application. The applications are generally issued and filed in the year before the property tax year. So for example, in 2020, we would be, for the most part, issuing 2021 property tax year application forms. And those are issued throughout the year as changes are reported. Now there may be situations where somebody would need to request an application and file that within the property tax year. So an example would be if somebody had just recently purchased a property and it wasn't in the program under the previous owners, they would need to apply for the portion of the year that they own that property. Now the application deadline for the farm property class tax rate program is August 31st of the year before the tax year, but there may be situations where we'd accept that up to the end of the property tax year if there were some circumstances that prevented that from being filed earlier. Now, because we continue to issue applications throughout the year before the property tax year, as property sales and ownership or other changes might occur, there would be people receiving it who can't meet that deadline simply due to the timing. If we've already reported the property as eligible to MPAC for a tax year, it would remain eligible for the duration of the year. MPAC would not take that property out of the farm tax class for the year. Now, if a deadline is missed by the property owner, they would need to contact Agricorp. We would look at their specific situation and determine what their next steps may be based on what would be allowable under the legislation. Agricorp reports back to MPAC on properties that have been approved for the farm tax class. Now, we would begin that process of reporting to MPAC in August of the year before the property tax year. And we work toward a goal of having as many assessments completed as could feasibly be done before the cutoff for the roll return. So any new applications or any outstanding renewals, for example, we would work to get those in before that cutoff point and get those processed in time to meet the roll return, if at all possible. And reporting on eligible properties would then continue on essentially a monthly basis until we've processed all that we can for the tax year. Now, if a property is determined to be ineligible for the program, the property owner may file a request for reconsideration with Agricorp. That would need to be filed with Agricorp up to the request for reconsideration deadline, which would generally be March 31st of the property tax year. If they do miss that date, they could apply for an extension through the Assessment Review Board, and they would need to do that before the end of the property tax year. Now, if the reconsideration is declined, they do then have an opportunity to file an appeal. And we've already touched on the last point on request for reconsiderations through MPAC. So we can go to the next slide. So this slide's this is just a visual of the key deadlines for the program from Agricorp's perspective and timelines for some program activities. There's a number of other activities that go on throughout the year that we just simply couldn't fit into the diagram. And that would include reminder notices to property owners who may not have completed their farm business registration renewal, for example. If there's an exemption that's expired. There's also the transfer of data that occurs on a monthly basis between Agricorp and MPAC. But the key deadlines there, as you can see, there's the applications that are issued throughout the year before the tax year. The cutoff for reporting assessments before the roll return would be generally late September, early October for Agricorp to report those to MPAC. And that's looking towards the goal of having that completed, and the roll return would then be December 15th. So March 31st of the following year would then be the request for reconsideration deadline. And the end of the property tax year would be the cutoff point for accepting applications for consideration for a property tax year. Next slide. So one of the key pieces of the process that accounts for the largest percentage of eligibility assessments would be the annual renewal. Applications to the program are multi-year. So once somebody is in the program, there's no need to reapply unless there is a significant change, or if they've for some reason lost eligibility to the program and need to reapply for that. But the eligibility requirements do need to be maintained on an annual basis. And property owners are required to advise Agricorp of any changes that might occur outside of what MPAC would report to Agricorp. So that would include changes to their FBR, their exemption status, a change to business structure, or if there's a change to tenants who are farming on the property. Now, if there is a change to the tenant on the property, the tenant would need to submit a form to Agricorp, and that would confirm that they are actually farming the property, and it would provide authorization to use their information. So the farm business registration status for the farm business or farm businesses operating on the property needs to remain valid and paid. And the FBR status is then reviewed by Agricorp on pretty much an ongoing basis. So as registrations for the farm business registration are renewed, the farm property class tax rate program status would be updated accordingly as they've met that eligibility requirement for the year. Next slide. So the final piece that we wanted to touch on is the integration between MPAC and Agricorp and the key roles that we play in administering the program. So this diagram here is a visual that we provide to property owners to help clarify who does what in the process. This can be a bit of a point of confusion or frustration for some property owners, particularly if they've purchased a property that isn't currently in the farm tax class or potentially not classed as farmland. So if at Agricorp we're contacted by a property owner and they're looking to apply, we would do some investigating on our end to see what their particular situation might be. So if the property isn't classed as farmland, we would need to then explain to them and direct them to MPAC to initiate the process to have a reassessment done. If it is classed as farmland but not currently in the program, we could assess their situation and determine their next steps in terms of both farm business registration and farm tax. So we could look at both of those programs at the same time because they are closely tied, one being an eligibility requirement for the other. And we could start the process for both of those. Next slide. So again, data is shared between MPAC and Agricorp on a monthly basis, and that goes on throughout the year. Agricorp reports to MPAC on properties that are eligible for the program. We also provide information on who is farming the property, so whether that would be the owner of the property, a tenant, or both. And we would provide information on the tenant farmers to MPAC as well. In addition to that, we might have some follow-up on individual properties if needed. So on an ongoing basis, we would be in touch fairly regularly just to keep things moving as smoothly as possible. Next slide. So property owners who have any questions about the program, including how to apply, how to report changes, they can contact Agricorp and we would walk them through the process. Any questions related to property classification or valuation, those would need to be directed to MPAC and they would assist with those. And that pretty much wraps up Agricorp's portion of the presentation. So I'll turn it over to MPAC and they can take it from there.
Thank you, Sarah. So it's Erin Jennings here on behalf of MPAC. I'm here speaking to you today about the Farm Property Tax Class program. The reason because my team, part of my team, include the tax incentive group who actually are the ones responsible for processing all of the changes, not only for the farm tax rate program, but also the conservation land and managed forest. So the process really is, we're going to talk about how once MPAC receives the information from Agricorp, how that is processed on our end. So when we receive changes from Agricorp, they're either basically processed by MPAC as in-year or year-end changes. Our in-year changes are the files we receive monthly from Agricorp for properties that are eligible for the farm tax rate program. These changes, the reason they're called in-year, are for the current tax year or prior. So but really the difference is the effective date of the change. We process these changes in real time for the monthly tax incentive approval extracts. and that those extracts you would receive monthly, and the property owner would receive their notice or their tax incentive approval letter. The other types of changes we refer to are the year-end changes, and the difference with these is they can be either removals or approvals for the farm property tax rate program, but they're effective for the following tax year. And these changes are then reflected on the following tax year roll, and the property owner is notified when they receive a property assessment notice. Next slide, please. So our tax incentive approval letter, it's actually just a notification, and what it does, it reports the revised classification, phase-in, and value to the property owner. There's no signature needed, it's just a results letter. However, as this is the first time the property owner is seeing this value and classification, they do have the opportunity to appeal to the Assessment Review Board if they disagree within 90 days. That isn't a very common practice, as usually property owners are quite satisfied when they get the tax incentive approval if they have been applying for it. Next slide, please. The tax incentive year end, these are the updates that MPAC makes, and they may be seen on the municipal change profile that you receive, or in Municipal Connect, you may see these events there. And basically what they are they're to indicate a property either being updated to be participating in the farm property tax class rate program, or in some cases, removing them from a program. It depends on what information we receive from Agricorp, and we're updating those for the following tax year. Next slide, please. So we also receive on a monthly basis the farm tenant changes. Sarah did speak about this. When the farm property owner updates information with Agricorp and there's a tenant change, we receive these files monthly. The farm tenant information is then updated, and it's either reflected when we're issuing a tax incentive approval, or if we're not issuing anything on that property, it's just updated for the following tax year roll and on the property assessment notice. Now I'm going to discuss sort of the timelines associated with these two types of changes. So first, for the tax incentive approvals or in-year approvals, we receive files on the 15th of every month from Agricorp, and these are for either effective for the current tax year or sometimes prior, depending which years Agricorp has deemed eligible. And the tax incentive staff at MPAC are processing these farm tax approvals in real time in preparation for the next extract. Our tax incentive approval extracts do occur on the first business day of every month, and I'm sure all of you are aware you can look at any of the extract schedules for the tax incentive approvals or any other of our in-year products. It's available in Municipal Connect. 7 days following that extract, the actual tax incentive approval letters are mailed, and so the property owner would be receiving notification. And then the listing, the tax incentive approval listing, is available then in Sightline and for municipalities to process. In some cases where the confusion can happen with property owners, and they might phone the municipality, or in some cases they're phoning MPAC, they might have received their approval letter from Agricorp saying that they're approved for the farm property tax class ahead of potentially when even the 15th of the month. So the property might then be included in the next file MPAC receives, and then there's still the timing between MPAC receiving that file and actually mailing the tax incentive approval. So there can be sort of a month sometimes where the property owner is waiting and thinking, where is my approval? And it's just a timing issue of when the different approval letters are sent out from Agricorp, then it gets to MPAC, and then we issue the tax incentive approval. For our year-end approvals, Sarah did cover that we do start asking for files in August to get them updated for our roll return for the because our keying cutoff is usually in our extract, even though the roll this year is until December 15th, our year end actually, our cutoff for making any changes is November 6th. So we do need to have time, especially based on the volume of approvals or removals that we may have. It's a manual process in most cases to update these properties. So we receive these approvals and removals. The tax incentive group at MPAC then correctly, reflects the correct tax class for the following roll return, so that when the roll is, administered, there shouldn't be any changes following that. Next slide, please. So requests for reconsiderations are fairly straightforward. If a property is already assessed as a farm and it's just the farm tax class that the property owner is seeking, then they would file the request for reconsideration directly with Agricorp. Where it's a multi-step process and there's a lot of interaction between property owners, MPAC, and Agricorp, is when MPAC doesn't currently have the property assessed as a farm. So in that case, the request for reconsideration must first be filed with MPAC, and the property owner will be requesting farm valuation and tax class. So if upon review by the valuation staff at MPAC, the property does in fact qualify for farm valuation, MPAC would generate and issue minutes of settlement to reflect the revaluation only. We would not be updating the property to the farm tax class at this point. Upon the property owner accepting the minutes of settlement to indicate they are now assessed as a farm, we would then forward a form from MPAC to Agricorp confirming that the property is now valued as a farm, and then MPAC would then inform Agricorp would then inform MPAC if they are eligible for the farm property tax class rate. And if that was the case, then a tax incentive approval letter is issued. And again, if there are any cases where the RFR deadline has been missed, the owner may file a request for an extension with the Assessment Review Board. Next slide, please. So something else that we commonly get asked is regarding severances and consolidations when they're involved with a farm property. So basically, it's the same as any other property type. So we have a parcelization department at MPAC, and they work in partnership with field office valuation staff to review the severance and or consolidation. And as part of that review, they're to determine if the new properties are to be assessed as farm. They then complete the severance or consolidation, and these new properties that are created are returned on the roll for the following tax year, just like in this case of any other property undergoing a severance or consolidation. The difference is as soon as the newly created properties are activated in our system, if they are determined to be farm properties, those roll numbers are then included in the monthly file that's sent to Agricorp, and then those properties would receive an application, because they're actually new properties now, from Agricorp for the farm property tax class rate for the following year. Next slide. And again, so when a property sells, we don't update or remove a property based on the sale. So the approval for the farm property tax class rate is for the entire year. So we're not making any changes mid-year based on a sale. If the new property owner doesn't meet the requirements, and so then Agricorp would indicate that it should be removed for the following tax year, or if not, if they do, if they receive a new application and they're still eligible, then there would be no change. So we basically, MPAC does not update any properties into or out of the program unless we're directed by Agricorp based on a sale. And so now I'm going to turn it over to James Harvey to discuss the last portion of the presentation. Thank you.
Thanks, Erin. And thank you everybody for joining us today. And a special thank you to my colleagues in Municipal and Stakeholder Relations for hosting this webinar today. So I just wanted to give a quick background on the working relationship that we have with OMAFRA and Agricorp. So back in the fall of 2018, it was determined that the program would be transitioning over from OMAFRA to Agricorp. And what we did is we put together a working group that included individuals from a cross section of our departments, including government relations, policy, IT, valuation. And at the beginning, these meetings occurred on a bi-weekly basis as the transition started. And now the meetings happen on a monthly basis between the three parties. However, when issues do come up, we are able to connect with each other immediately to try and resolve the issues. So we don't just simply wait for the monthly meetings, but we actually are able, and we do, communicate on a very regular basis. And the monthly meetings will continue until it is deemed that maybe we do not need to. But as of right now, these monthly meetings continue to happen between the three parties. So if there are issues that come up from the municipal side, we are able to table them at the monthly working group to have them resolved. And that is the end of the presentation. If you are looking for more information, you can always go to agricorp.com or mpac.ca. But I believe I'm going to hand it back over to MSR, and what we will do is open it up for questions.
Hey, James, thanks for that. My name's Jason. I'll handle the question and answer for this session. I guess a first one that I'll pass to the question along to Aaron is MPAC no longer provides transfers of ownership to MNRF for the managed forest classification program due to confidentiality. Is this also the case with ownership transfers and notifications to Agricorp?
Thanks, Jason. I think there's actually a little bit of a misunderstanding. We do, in the monthly file, provide ownership information to MNRF for managed forest, but it is the current ownership information, so we aren't giving them any sales data. So I think maybe that's where the misunderstanding is there. We do provide ownership information. However, we aren't indicating when there's been a sale on the property, but the current owner is listed.
Thanks, Aaron.
You're welcome.
A question, I believe it may be for Carl, is could you describe the difference between appeals heard by the ARB and those heard by the Agriculture, Food and Rural Affairs Appeal Tribunal?
Yeah, thank you for that question. Typically, the appeals that ARB hears directly themselves are related to the land classification itself. Matters related to whether the property is eligible for the farm tax program goes to AFRAT. James, can you kind of just confirm that?
I can, sorry, Carl, I can confirm that because my part of my team also deals with the processing ANAs and all of the appeal decisions that we receive. So that's correct. So basically the Assessment Review Board deals with any issues with the value. However, similar to how MPAC does not determine if a property is eligible for the farm tax rate, the ARB doesn't determine that either. In that case, it then gets referred to AFRAT, and they determine what portion of the property, if it qualifies for the farm tax rate. So it's sort of a two-step process again, but it's the AFRAT who determines if it qualifies for the farm tax rate tax class.
Perfect. Another question was, will people get a copy of the presentation from today? I can answer that one. The answer is absolutely. We'll get that out to you by tomorrow morning. A question for Agricorp. Does Agricorp require a corporation's shareholder register to be provided with an application?
Yes, we do. That is part of the application process. So we do, we ask for those when the application is submitted. We can't finalize the application for corporations until we've received that. So we do look at that information, definitely.
Excellent. Another question, which I believe also goes to Agricorp. if a Canadian resident is farming a property, but it's in foreign ownership, they will not get the farm tax classification, correct?
So in terms of eligibility, we would look at the farm ownership, not necessarily who is farming it. So it doesn't need to be farmed by a citizen, but the property would need to be owned by somebody who meets the citizenship requirements. Does that answer the question?
Thank you. It does.
Okay, good.
How does Agricorp treat a property with respect, or a property that is owned by multiple corporations?
Multiple corporations, each of them would need to meet the same requirements. So they would need to have more than 50% of the voting shares owned by Canadian citizens or permanent residents.
Okay, excellent. And a question for Aaron, for MPAC. Can a TIA have an effective date that is reflective of only a partial year rather than a full year? For example, if a farmer buys a property mid-year, but the prior owner did not apply for the program.
No, the tax incentive approval letters are only effective January 1st, the same date as the rule. So they're effective for an entire tax year.
Okay. A question, do all ownership changes result in automatic removal from the farm class?
So I think both Sarah and I sort of touched on this, but no. So basically when there is an ownership change, which we send a list, again, on a monthly basis to Agricorp, they then review that list and determine if there's been a change in ownership, and then would send the new property owner an application for the following tax year, and MPAC wouldn't remove it based on a sale for the current tax year.
Perfect,
the only
thank
case
you.
that would get, I guess it would get removed if the new property owner was determined upon review of the application if they didn't return it, or if they were determined to be not eligible.
Carl from OMAFRA here, and just to add to that response is that, of course, the property stays at the farm tax rate for the remainder of that year. Agricorp does do their best efforts to try and contact that new property owner, but if they are unresponsive, come the August 31st cutoff date, then for the following tax year, they will be reported that their property is not eligible. Usually then that may result in, once the actual, either the revised property assessment notice from MPAC in I think around November, hits eventually to the property owner, or the actual tax bill showing that they're at the higher tax rate. That may then, from the owner's perspective, they may feel that they were removed from the program, but they've just been unresponsive to all the attempts to contact them. And then at that point, they're looking at going through the RFR process.
I guess I could speak a bit to Agricorp's process. When there is a notice of a change to ownership reported to Agricorp, we would issue an application to the new owners. We would set the property to ineligible at that point in our system. Now, if it had already been reported as eligible for the year to MPAC, then MPAC wouldn't remove it from the farm tax class. If we don't get an application back, or if they don't meet the requirements, then they would remain as ineligible. If they do respond, if we get the application back and assess them as eligible, then we would make that update to our system.
Okay, a more general question, and I guess I'm not even sure who would answer this, but it's, how are farmers notified about this program?
When Agricorp receives a notice from MPAC of the ownership change, we would receive the owner's names and their mailing address, and Agricorp would issue an application by mail to the new property owners. So I guess that would be likely their first notice that some action needs to be taken. You know, of course, if they don't respond to that and at some point the property is removed from the farm tax class, from the farm property class tax rate program as a result, then there would be a notice of the change through MPAC, and then that would trickle down to the municipalities and the tax bill.
Perfect, thank you. Is there, and perhaps this is the question for Carl, is there a pamphlet or a ministry webpage that provides an overview of the information about the program to property owners?
There used to be one a couple years back. It had been discontinued. I think that's generally just the move away from paper products and going more online. Both OMAFRA, Agricorp, and actually even MPAC, I believe, have all links to each other's websites in terms of somebody who's proactively looking for information about the program.
Agricorp does have sort of an information sheet that we would send out with the application package. Most of the information would be on our, or the high level information anyway, would be on our website as well. And if that doesn't resolve their questions, then property owners could certainly call Agricorp and we'd walk them through whatever they need. In terms of a pamphlet though, yeah, we do have a small information sheet that we put in the application package.
Okay, perfect, thank you. I believe you've covered this, but just the question came up a couple of times. I think it's for Sarah. Can you clarify if farmers need to apply for the rate or if Agricorp determines eligibility based on the active farm business number and income?
So somebody would, a property owner would need to apply to the program. It's a multi-year application, so when there's a change in ownership, there would need to be initial application that would need to be approved. And from that point forward, they would need to maintain that annually by completing their farm business registration renewal every year. Perfect,
thank you. A lot of the questions that we have coming in are ones that we have addressed. A question also was, is there going to be a recording of this webinar? And the answer is yes. We do endeavor to get that out to all of the attendees of the event within 1 week's time, because we do have to do some processing of the file once the event's done. And I think with that, I believe that we can say we answered most of the questions on here. And for those that we did not answer, some of them do get into the weeds a tiny bit of a unique situation or a municipal consideration. For those, we will provide those along to the presenters today in the hopes that we can get a follow-up to you with your specific consideration. So with that, I'd like to pass it back to Chris Rickett.
Hey, thanks, Jason, and thanks to our subject matter experts for making time today to talk about this program. I want to thank all of you who have logged in today for your time and your great questions. And again, if you have any further questions, feel free to reach out to the team, and we'll get these answers out to those individuals in the coming days. You can stay tuned. We will share the slide deck as well as a video of the presentation in the coming days. Have a great Wednesday, and we'll see you again next time.